Hey guys, I'm Richard Fitzgerald. This is Dubai Works, where we interview the business leaders making a difference in this great city.
That business with scalability was very interesting to me.
I like building something that has legacy.
Welcome back to another episode of Dubai Works Business Podcast. Today we are joined by Walid Shihabi. He is the co-founder and CSO, Chief Strategy Officer of Keyper. They are UAE's first of its kind prop tech app, curating an ecosystem of real estate stakeholders to provide the best experience for property investors. So we're going to talk about how he and his co-founder came up with Keyper, the tenancy market in the UAE, their plans for the future, and particularly talk about current trends around the World Cup and short-term rentals. Good morning, Walid.
Good morning.
We tried to do this the other day, and now we're finally sitting and chatting. So
that's true. Mostly my mistake. Yeah.
No problem. No, all good. Good to be here. Yeah. So it's end of the week. How's end of the year? How are things going?
Things are brilliant. Very busy. A lot to focus and work on before the end of the year. There's a lot of planning for a marketing launch and a lot of product development work that we're doing in order to be ready for the major market launch. So crunch time, but it's a lot of fun, and it's lovely to see thoughts become reality in a product like ours.
And what were those thoughts? What is Keyper?
Oh, you want to get a preview into my head? It's it's a little bit crazy in there, but to sum up all the words that you mentioned, it's pretty much we're a digital property manager in your pocket, effectively. And our target audience is at this stage in our life cycle, the property investor in Dubai, the investor that acquired real estate for investment purposes, meaning capital gains and rental returns on that property, and then potentially accumulated additional properties or traded in the market and so on. And it's that customer base that we believe is severely underserved in the market, and they don't need to be. They have invested a lot of capital into this asset class, and there's a lot of tools that can help them achieve their investment objectives, and we're trying to deliver on those.
And what are the things that they're underserved? What does that person need?
They need visibility, they need live information, they need market updates, they need guidance potentially on where to deploy and how. They need help in looking at certain options and assessing them properly from an investor's perspective. They need also their counterparts in the industry to understand their objectives rather than push on them their own priorities. And that doesn't exist to a large degree in the market. What we thought of and what we provided, and this is the result of personal pain, right? This is the result of going through the pain cycle myself as a property investor, as a property fund manager, and as a property operator in Dubai, is that we realized how much is missing in that journey in terms of solutions that the market could be offering, and we took on that challenge.
Amazing. So how did the name Keyper come up?
Good question, that one. That almost ended the company before it started. Arguments about the name. But no, that's an exaggeration. But the truth is, it's the third one that we adopted, and neither one of the founders can claim it. It was in what ended up being the 15th meeting about the name. That somebody that hadn't contributed much in the previous debates came up with the name, put it on the table, and we all looked at it, and it was a light bulb moment. It was absolutely, this is it. And we all loved it because of what it implies. There's a trust element implied in there, and then the word itself lends itself to a good description of what we do. We keep your properties in safe hands. We keep your portfolio taken care of. We are a property keeper in effect. And then we started using that name in order to describe different functions within the company, which was a lot of fun. like the talent Keyper being our HR person, and
Nice.
and so on. So it caught on. Anybody who is outperforming, we call them a keeper. She's a keeper, he's a keeper, and it caught on, and it ended up being part of our culture and our own brand identity.
Yeah, definitely. And so tell us a little bit background. You kind of alluded to the fact that you know the real estate industry quite well. Is this your first startup? Are you one of those? Yeah.
It is not. My original background is in finance. It's in investment banking. So the investment space is very, very familiar to me, in Dubai in particular. And I was in that industry for 15 years. And my focus during that period was data, research, insights, etc., on the domestic and regional capital markets or stock markets. And this period in real estate reminds me a lot of those early periods where I was involved in research, where there was a lot of speculators in the market, but not a lot of true knowledge, research, and insights being provided, and proper objective advice being provided to people who are deploying money into this asset class. So I spent 10 years effectively building research and data capabilities within my previous role in investment banking, and had a very, very deep appreciation of what data can do, what proper information presented properly, processed properly, and presented objectively can do in terms of your performance, your investment performance, and the trust that you have with the advisor that you have in that particular asset class. And I took that with me for my first startup. My first startup was in 2012, and they tell you if you're a hammer, everything looks like a nail. So my startup was a fund, right? I had investors that I had built up over years, strong relationships that trusted me. And I raised from them a real estate fund to invest in Dubai. And that was the early days of Airbnb. And the idea was, if operated properly, we could convert these residential assets into hospitality assets and generate significantly more returns from that. And that was pretty much the birth of the short-term rental industry at the time. Back in 2012, it was a very, very early stage of adoption of Airbnb as a hospitality alternative. So I jumped in, created an operating company that operated these assets, the ones that we bought in the fund, for short-term rentals, which means we furnished them and we listed them on the sites, and then created our own booking engine and booking site for these properties, and started generating returns, and learned as we go. I'm not a hospitality guy, but I dove right into the hospitality sector to understand guest expectations and the channel itself and how it works and the algorithm and what puts us higher and gives us more eyeballs looking at these properties. And it was amazing. Airbnb's become ubiquitous. I don't know if I say this word right. Is that right?
Sounds right.
But it became, synonymous, if you like, with the short-term rental space, with the vacation rental space. But back then, it was still very, very early days. So they were figuring things out as we were figuring things out in the short-term rental industry here. But the company is still up and running. It's called Hometown. It manages not just the assets of the fund, but also the majority, actually, of the properties it manages are third-party properties, people who invested in assets and want to utilize it in short-term rentals. But as I built that company, and over the years and the cycles of the market, I hit every pain point you can imagine being a property owner, investor, and operator, from financing to access to data, live data, to access to reporting tools, and access to solutions that are quick and deliver on my requirement. And over time, I just accumulated so many of these requirements. I slowly, gradually found out that they weren't just my requirements. Pretty much everybody with the same intention of acquiring property for investment purposes has very, very similar pain points and has very similar requirements to the ones that I witnessed. And when I found an alignment with my co-founder, Omar, we started the company, got great support, raised our initial funds, and we've been up and running since the beginning of this year.
Amazing. Beginning of 2022. So you sort of came up with the idea post-pandemic. It's something, a solution that you think is felt in the market. And what sort of, what was the sort of trigger point for you to go, okay, we're going to do this. We need funds to do this, and this is going to be in the prop tech sector.
Well, it's a couple of things, I would say. The time was right. The time was right, I believe, from my preparedness for the project, but also the time was right from what I found to be, number one, the technology caught up with the requirement. My knowledge of the technology caught up with the requirement, and access to data became so much better in the domestic market in Dubai. So putting these three together, you have the ability to create a product that actually, and it's our belief, that can revolutionize the experience of a property owner in Dubai and pretty much anywhere else that shares the same profile as this city.
Okay, so if I'm a property owner and I register now or in a couple of months, I go on to Keyper, what's the experience and what do I get out of it?
It's pretty much digitizing your portfolios, digitizing your ownership of the asset. So the first base that we built was pretty much mapping Dubai. We mapped every single unit in Dubai with all its details, with all its information, and then matched it to the feed coming in through open data from the Dubai Land Department related to transactions and related to leasing and related to mortgages and all the property-related feeds that were coming in live. So the experience allows you as a property owner effectively to claim your property on the platform and have it digitally represented. We give you immediately a live valuation on your property based on the current existing market transactions, plus a forward-looking component to it, because we also find what listings there are of similar properties in the market, and we apply an algorithm to come very close to what your property is worth today, showing you what your capital gains or losses on that position were compared to your original acquisition price. Wow. We capture the returns that you're generating, so if the property is leased, what your yield is, what your cash flow looks like, what your expenses are. You don't need to enter that information. We already have it. Brilliant. All you need to do is claim that property. And then we activate the solutions. So the platform itself is free. You can go in, create your user, claim your properties, and the claiming process is very, very easy because we've mapped Dubai and mapped all the locations and the units within those locations. You just go in and claim your property, and then all the rest of the feed comes in.
Do you have to verify it with a title deed?
With a title deed, which we verify back with the Dubai Land Department. This is a digital verification confirming the ownership of the property, and that enables you effectively to claim it. Nobody else can claim that property until you sell it on that on our platform, and you claim all the data feeding into it. And the data feeding in, we've expanded the remit of that data. So it's not just based on the property you own, but based on your profile. Which effectively means that, if you own a number of properties, but there is a debt component to them and there's payments out to the bank, we try to capture that and re-represent it to you so that you can manage your cash flows to find out whether your rent is covering those payments or whether there needs to be an additional cash injection in order to cover that mortgage, for example. Or we can tell you what similar properties to yours have been trading. So the minute that you claim that property, it's live and you're viewing your valuation, you start getting notifications that you own unit 505, unit 605 just sold for this much. Right? And now there's a live market transaction that just happened on a similar unit to yours, and that gives you insight and input that you didn't have otherwise, or you would have had to go out of your way to look for that information. The feed becomes natural and related to your portfolio.
And what's the revenue model?
We provide the services. So the minute that you are on that platform, you are able to make use of the solutions that are available on that platform. The primary solution that we provide is property management. So effectively removing the responsibility of actually dealing with your tenant, performing on your property, dealing with maintenance issues, dealing with payment and payment processing, and dealing with expenses such as your owners association fee payments and so on. We can take that over, and you'll still have a fantastic reporting tool that tells you everything that we're doing completely transparently, while you give us also the input on what your objective is, what kind of performance you're looking for. We also digitize the process of coming to market. If the property is getting vacant in the next couple of months, you can activate the listing process. So we will make that property live even before the existing tenant exits, so that we can perform on it, because we capture all the marketing collaterals into that app itself.
But you put the listings on other platforms?
On other platforms.
Yeah.
We're not a channel. A lot of people get confused and assume that we are a listing channel or a portal, a listing portal. We are not. We work with all the portals. Our priority is performance for the property owner, is putting it in the right hands. We have broker relationships, each within their area of specialization, so we know who is better in that particular neighborhood and who specializes, for example, in the Palm, and who specializes in other residential communities in Dubai. And we have an arrangement that means that we provide them with that inventory at the time where that service is required, and we only pick the ones that actually perform the best in those neighborhoods. So the idea is to have one point of contact with that property investor and then perform on their behalf.
Amazing.
For their properties.
Amazing. And yeah, so it sounds like that there's a lot that goes into setting up Keyper. You have to, all that technical work, the mapping, the build, and then providing the services as well. Has there been a big capital outlay to get this up and running?
Inevitably. And we're only in the initial stages of that capital outlay, but it's very important to understand the total addressable market that we look at in order to see what the investment needs to be. This is the single largest asset class in the world, and this is the single largest asset class in Dubai. It's the biggest investment destination, and it actually is in the tens, if not hundreds of billions of dollars worth in transactions. So it's worth it. It's worth the effort going into it. It's also worth it from the perspective of our customer base, because our customer base at the bare minimum has a very significant portion of their personal wealth, of the work that they've gone through over the years and the savings that they've accumulated over the years going into this particular asset class. We believe it's worth it for them, for us to invest in making their experience better and making their knowledge and insights about this asset class better.
How much did you raise? Was it a seed round?
So we raised a seed round. We've raised in excess of $4 million so far. The majority of which we launched, we raised pre-commercial launch. And from partners that are both from the venture community as well as strategic partners of ours, people who specialize in real estate, both in terms of development and operation, and agency businesses basically have participated in our capital, our cap table. And it was brilliant, because so far we've not spent a penny of marketing, but our only problem is we have too much inventory coming in and too much demand. And that's beautiful when you have a network like the one that we have built with our stakeholders and with our shareholders, as well as obviously the team that we've built since then. We're up to almost 40 people right now between Dubai and Amman, Jordan. Amman, Jordan is where the majority of our technology team resides. But the team that we have in Dubai, including the commercial team, also come with very significant experience and network within the domestic market. So we've not needed to market the product. It's been handed over from one user to the other, which is the sort of network effect that we wanted to test, the sort of market fit that we wanted to achieve before we tell everybody else what we have, what we've been building, and what we're gonna hopefully build further in the future.
Yeah, it sounds great in theory. When you ask people, advice on investments, they will say that property is a good investment, but it's more heavy lifting and more personal work than trading on an app. And
Yes.
you're taking that work out of it. So
not all of the work. The work will always be there. I think we talked before going on air that sometimes people think certain industries are fully digital. There's no point in fully digitizing the real estate industry, but because it will always have a personal component to it. It will also always have emotion. It will also always have biases and personal preferences and personal targets. And I don't think that will ever be eliminated. It will never be a digital product end to end. But my issue with it is that it's not been assisted by the digital conversion that's happening pretty much everywhere else because of that assumption that it is personal, that it is emotional. We try to eliminate what doesn't need to be emotional in the process, because we believe that data, once captured correctly and processed correctly, doesn't lie. All it can give you is more clarity. And we like to give our investors clarity. We like to give them access to live information. We like to give them access to live valuations, live performance, live cash flows. You know, you just received rent right now. It's in your account. You need to know that. You need to know it beforehand in order to plan for, for your expenses. Nobody invests in capital because, in real estate because it's fun. They invest because they have investment objectives. So we just try to get those investment objectives closer to you and more monitorable by you.
Interesting. And so prop tech, what sort of license or free zone did you go about, and was that process easy?
We're a DIFC based holding company with operating subsidiaries. So you need a property management license to manage property, of course. So that is a Dubai Land Department license, and you need an agency license also to process transactions. We are an owner representative, effectively. So we represent one side of the agency business, which requires us basically to have that agency license in place. It also requires us to adhere to the standards of the Dubai Land Department and RERA when it comes to the processes that we carry out. But within that context, so much is digitizable that isn't by the legacy industry here or by the conventional industry. And a very simple example is when you go lease a property, right? Be it you being the landlord or you being the tenant. It's a disjointed exercise with too many parties getting involved and too many physical pieces of paper exchanging hands, with a lot of space for mistakes and inefficiencies really in the process. We've digitized it end to end. And it is fully digitizable. The Dubai Land Department has been very forthcoming when it comes to adopting innovative digital solutions when it comes to acceptance, right? But adoption from the industry has been very, very low because not a lot of people are willing to make the investment in the back end, in digitizing the process, in coming up with a workflow that makes sense and that works and that's been tested and so on. And we spent the time doing that. So today, nobody needs to get out of their seat to get a new tenancy agreement negotiated, agreed, paid for, signed, processed, and moved into in our process. And that's the efficiency that the technology gives us. It's not bells and whistles. It's the core of the product that we're addressing that never needed to be physical in the first place, given where technology is today.
And how would you describe, outside of what you're doing at Keyper, the status quo of the real estate industry business-wise in Dubai and the UAE in terms of who the players are on all sides? Is it mature? Is it competitive? How would you describe it?
It's definitely maturing. It's definitely competitive. It is one of the core industries of the hub that is Dubai. Starting from the financing to the developers. We're talking about some of the largest listed companies in the Middle East are the developers of the real estate of Dubai. So you can imagine what that implies in terms of economic value that the sector brings. The city also is one of the fastest growing global cities in the world when it comes to both capital and people, which implies always that real estate is at the forefront. Supply of real estate and real estate as an asset class is always, top of mind in terms of conversations, if you like, in Dubai. Everybody's talking. They find out you're in real estate, you're going to get 10 questions in a sit down. So it's very, very core to Dubai. It's also one of the many recipients of capital in Dubai. Probably the number one recipient of foreign capital is the real estate sector here. So I have to say it's a core industry for the city. How is the industry playing out in terms of its participants? I think we're seeing very, very interesting days. There is much more innovation today than there used to be. We saw funding rounds for companies that have come up with quite innovative products, such as the fractional ownership space, or in terms of digitizing certain processes within the property acquisition process, or so on. So it's catching up on a lot of fronts. It's always had incumbents also that have been strong. And I think it's dynamic enough that a player like ourselves can quickly distinguish themselves if they invest in the right technology in the right space and deliver the right message to our target customer base.
Fascinating. Yeah, totally. I think what this region and what Dubai has done well, obviously, is real estate, and it's almost the one thing that all business people here know really well, and they kind of stay true to it as other innovations come. But then we have seen, in the last 20 years, well-known sort of players in the digitizing of real estate and on the different elements of it, such as property portals, etc. If we speak particularly about property portals, or then agencies who maybe aren't as digital, who do you think could have done what you're doing, and why haven't they done it? Have they not thought about the property owner as much?
It's a lot of capital upfront requirement. So I'm not going to claim that they haven't. A lot of people have invested in this direction, but they've not invested in proprietary technology, in my view. In the agency business tends to try to find solutions off the shelf, usually, and that's good and well, but that doesn't help innovation in the space. You need to be willing to make the investment without the immediate return in order to transition such a big industry into something we believe is new and adds a lot of value to the process and to the participants in it. The portals have done better in terms of digitization, but portals, in my view, are absolutely, they're the grandfathers of prop tech, and I don't know if they will find that as a good term or not, but in my view, they tend to be sort of prop tech 1.0. There's a lot more that can be done in that space. There's a lot further integration that can be done in that space with the transactional side of the business that they haven't done so far. But I think it's because the agency business is so fragmented, is that not a lot of innovation has gotten into the agency business. Maybe property management is a little bit more concentrated, but still extremely fragmented. So we've not seen a leader in technology in that space in particular emerge, and we think it leaves a big gap in the market for somebody to emerge to cover that spot. Because today we still, by and large, purchase property, invest in property, manage property the same way we did 20 years ago. And no industry I know of is there.
And do you see similar companies to Keyper in other markets?
There are, yes. I mean, I wouldn't say identical. We haven't cloned anybody for this
but it works elsewhere.
Product, but the concept works very well elsewhere.
Yeah.
There's been startups in particular out of the US, but also in other places that have consolidated hundreds of thousands of properties and thousands of property owners into a singular platform where they reside, where they live, where they transact, where they manage, and where they monitor. And we have the same end goal. But I think because we're starting now, we have access to even better technology than somebody who attempted this 2 or 3 years ago.
And where does this go? The whole sort of real estate digital transformation. Do you think it's a zero-sum game? Do you think there's one big winner, or do you think it?
Oh, absolutely not. And there shouldn't be. I don't think it's a winner takes all sort of industry because, well, for one, I think the consumer in real estate wouldn't allow it. But also, the other thing is it's a very lucrative space, and you will always get competitors that will want to fund, the next big thing in this space. I think the market's big enough to have a lot of innovators in the space without having to step over each other. The portal industry might be a little bit different. The portal industry tends to lend itself to a winner-takes-all mentality because you will always try to search where all the properties are, right? So whoever has inventory will always have an advantage. It's a little bit like the Amazons of the world. The transactional business doesn't function exactly the same way. A good market share in the transactional front in real estate would be 3%, right? That would be extremely lucrative. But the total addressable market in the transactional front is probably around 50 to 100 times larger than the portal space.
What do you mean the transactional part? The price of the value property, or
the value, the revenues actually generated within the space.
Okay.
So if I consolidate all the agency commissions on sales and all the agency commissions on rentals and all the property management fees and all the agency commissions on mortgage provision and all the sort of revenue that you can generate from other financial real estate related financial products, that value significantly exceeds the total revenue being generated by portals in the industry. So it's a bigger prize for sure.
And so you're not necessarily doing the transaction yourself. You're working with the portals.
Absolutely.
But you are putting the property owner first. And one of the things the property owner can't do now is sell their property themselves. They can't list it on a portal. They have to use an agent.
Yes.
Would you be empowering them around that path in the future?
Absolutely. Empowering them doesn't mean necessarily that they no longer deal with agency businesses. Agency businesses have an important function to play. But giving them more control over the process and more visibility and immediate reporting and understanding of what's going on by that agent becomes what we can improve significantly. Giving back control to the owner of the asset effectively, rather than keeping the control of the process with the agent.
Okay, so switching tack a little bit from property to other asset classes. Other asset classes have been inherently digital trading and things like that, and what you've done in the property sector has been available to people in other asset classes
for decades,
and it works quite well. So are you trying to, do you think that that's where you'll get market share from as well, from people, asset class switches basically?
Asset class switches happen usually based on the performance of the asset class itself. So you're going to find these days a lot of people exiting crypto, right? Because it's not been doing that great, and there are a lot of issues popping up related to regulation and bankruptcies
and trust with platforms as well.
Exactly, trust with platforms and so on. While on the flip side, and maybe particular to markets like Dubai, we've been having a very, very strong year or two. In terms of the market. So you will see asset switchers, people exiting from these very liquid but speculative investment spaces and say, you know what, now time for something solid. something that may not jump 100% in a period of 2 months, but also that I can trust will not collapse in value and has an inherent return built in, which is the rental income that you can generate on the asset. So that switch happens based on performance, usually not based on ease of access necessarily. I think what we want is the existing market share of real estate. It doesn't need to go bigger. It's already the largest asset class that any investor's portfolio is put into, or average investor's portfolio is put into. What we want to do is make it, number one, more transparent and potentially more liquid by facilitating and solving for some of the frictions and some of the bottlenecks that exist in the process. Not necessarily increasing the market share of real estate. It's already very, very healthy.
In terms of investment, but do you think that because Dubai is such and UAE is such a real estate so prevalent in the economy here, do you think that people are more likely to seek out investments in that space, or are people attracted to other asset classes a bit more in the future as the city evolves?
I think all asset classes will remain popular. Cryptocurrency excluded from that statement because it's yet to prove its utility as an asset, in my view at least. I know there's a lot of haters I might get for that statement, but in my view, the utility isn't proven yet for that asset class. But for the rest of it, I'm a big fan of the equities markets. I'm a big fan of what they do in terms of building up an economy and assisting startups that are domestic and so on. My opinion is that Dubai attracts investment in real estate because of the collection of factors that it has delivered in that space. It's very attractive as a city. It's very open as a city. It's very accommodating as a city, and the product itself, the real estate product, is phenomenal. It's might be the best in the world. It tends to be relatively liquid, which means if you buy a reasonably priced property, you will not have to wait a prolonged period of time to be able to exit it if you wanted to. And in terms of financial solutions, also access to them is relatively good. Could be better in some areas, our opinion, and we are working on building products that are much easier and much more convenient for the type of buyers that we talk to, which are the investors, not the end users. An end user wants a mortgage, wants to pay something other than his rent, right? So they will always compare the rent that they were paying in their property versus the mortgage payments that they have on the asset they bought. For the investor, the requirement is very different. The cash flows are different. The purpose of the acquisition is very different. The purpose of the acquisition is to generate an income, and that income itself can be a financial asset. And that's the investment banker in me trying to digitize that element of it and then make it a solution for the investor.
It sounds like, if we take equities, for example, it sounds like what you're saying is that innovation will help. If say there's a lot of IPOs in the market right now, yet there aren't trading apps that the user can invest in the domestic stock markets or regional. So that industry needs innovation, but equally in the property space, that if there's more solutions like Keyper, then more investment will end up in that space with more innovation.
Absolutely, more investment, and I think a broader investor base. Keyper is, if you ask me what the ideal customer of Keyper looks like, it's not the exclusive customer, but the ideal one doesn't reside in Dubai. So he's 1 or 2 degrees removed from the goings on, not as informed about what's going on, and maybe tempted by hearsay or headlines, to think in a certain way about the market without having the insights enough to make the right decision about their investments. What Keyper does is give him, feet on the ground, effectively, give him good live understanding of that investment, which gives them comfort, which may mean that they will allocate more assets or more capital into this asset class, and then tell his circle about this great investment that they did in Dubai, display it digitally on our app to show them how it's performing, what it looks like, the digital twin in there, push it forward the property card to them, which makes them download the app and see his properties, and then potentially activate an investment in Dubai through that. I see that journey.
Interesting.
I hope that journey happens. A lot of the journeys we envisioned at the beginning of the year have started happening. We're seeing them with their clients, how they're behaving on the app, how they're activating certain things. So I feel like the profile I told you about is where we feel that, you know, one of the core product market fits that we're trying to achieve would start happening.
Brilliant. And what's in the roadmap, you know, as we look towards 2023, what are your plans for Keyper?
I think the most important thing, well, the public market launch, where people will be hearing a little bit more about us, I think that's critical. Understanding what it is the value that we're trying to bring to the table, the solutions to their experience that we're trying to put on the table. But the other part is really the product. It is evolving that product to where it is constant, regular value generation for the user, as well as activating the financial solutions, which is the trickiest but most interesting part of what we will be doing.
What will they be?
So one of the biggest frictions you have over here in the experience of rental on the one end from a renter's side and property ownership or investment on the other is the terms of the tenancies. Majority of tenancies in Dubai are paid upfront by a significant margin. It's a big burden on a renter, on a tenant. But there has not been a solution because it's generally dependent on the landlord's requirements. I want 4 payments. The contract is for a year. I want 4 payments, which means you're always paying 3 months in advance. In some cases, 6 months or a whole year in advance for that rent. And what we're bringing to the table is effectively a solution that bridges the two, where the landlord can receive the payment upfront and the tenant can make easier monthly payments on the same rental. It's a financial solution for the landlord where they give up the default risks that they have, including managing 12 different checks, which no landlord wants to really do. And it's a solution for the tenant who may be able to afford the property based on their monthly income, but cannot afford or do not want to borrow, basically, to pay for that upfront payment, especially if it's a new rent, by the way. It's not just that upfront payment. You have your move-in expenses, you have your commissions and the registration of the rent and so on and so forth. So it becomes a very heavy burden on a conventional tenant. We're stepping in the middle and we're allowing the landlord to receive it in a single payment and the tenant to pay it down in 12.
Amazing.
And digitally, which means you use your credit card to pay your rent. We deduct it on a specific set date every month.
Amazing. Would you need a financial partner for that?
We do have a financial partner, a financial institution that is in the that is the financial supporter, if you like, of this solution. We're launching it not to the market all at once, of course. We're launching that product to the properties under our management, where we have control over the process. And where we can take over the default risk if it exists from the tenant, and can move that relationship forward. So the initial steps will be only for properties under our management, but we have hundreds of properties right now directly under our management, and we will be piloting probably until the first half of 2023 on these properties. It's an offer. You're not obliged to use it, but it's an offer that is a facilitation. It's an additional solution on the table that you can utilize at no additional effort.
Amazing. Okay, great. So 2 questions to finish, both with your economic forecast hat on. One specifically about the real estate market, and then more about the general economy in the region. So obviously the real estate market is going through a bit of a boom at the moment, especially in Dubai and the UAE, but there might be some headwinds with interest rates and things like that. How do you see things playing out over the next year or so?
Absolutely, and that's a great question, and it's not one that I've necessarily have a very strong opinion on yet, because it's two competing influences at the same time. Interest rates are higher, so your mortgage is going to be more expensive if you're going to buy that property, and it might dissuade you from that acquisition today, which means that the demand side right now is under pressure. At the same time, when interest rates are higher, yields are higher, if you're getting in the bank the same as or more than you would get if you invest in a property in terms of yield, that's also going to dissuade you from making that investment, or it's going to work against making that investment. Having said that, the population trends in Dubai all indicate that demand is very good. Days on market for a property to rent out have shortened by half compared to around 18 months ago. Property rental prices have gone through the roof in a lot of neighborhoods in Dubai, which is also an indicator of very, very healthy rental demand. So when you have prices going on of rent and occupancy rates high, so vacancies very, very low, that's an indicator of an extremely healthy demand side in the market. Is there steam going to come out? Yes, there have been capital injections into real estate in the city coming from outside that were a spike. I don't think that spike will continue, or at least not continue from the same sources. So that might tail off some of the more speculative or immediate or cash-based investment that's coming into the market. But the truth is, we also had a lot of amazing reforms that happened over the last year to a year and a half, economically, socially, and even in terms of incentives like Golden Visa or so. So people are more rooted these days over here, and they feel more comfortable making that investment in real estate, what they can't take back with them, basically. That's a sign of rooting. And I feel that might continue to outweigh the interest rate argument, but it depends how far the interest rates go, right? I don't think the market is due for a crash. I don't think the market is yet at the levels where we were in 2014, by the way. And that's not including some bubble area. I wouldn't call them bubble, but some areas that are priced slightly differently, that are becoming extremely exclusive, areas that are seeing demand that is extremely exclusive, that is sort of removing them from the general market. They tend to make the headlines. They make it sound that the market performance was actually better than it was. But the majority, I would say 90 to 95% of the market, the residential market in particular, is still not back at the 2015, 2014 levels. So that's also a comforting factor. If you're looking at the real market, the majority of the market, healthy levels, healthy yields, no major bubble concerns from my end on that front.
Good to hear. Positive note for people who want to invest in this region as well. But speaking of that, what's your view on the Middle East as an emerging market? Are you bullish for the region?
For once, we're acting very counter-cyclically, as they say, which means we're having a great time where there's recession going on out there. Now, I worry about decoupling arguments, because at some point in that time, global demand down on everything means that it will drag the rest of the region down. Having said that, I think we have a fantastic couple of years to come when it comes to the economic performance regionally, because it is backed up by initiatives that make these things possible, right? It's much easier to start a company today. It's much easier to be innovative. It's much easier to raise funding from the right sources that will be supportive. So I'm loving what I'm seeing. I feel like we have at least a couple of more years to go off a very healthy environment before maybe a period of slowdown would kick in. So I'm still a bull on the market.
Amazing. Brilliant. Well, thanks so much for your time this morning, Walid. Really interesting to hear about Keyper and what you're doing and sharing your thoughts as well.
My pleasure. Thank you for having me.
Thanks a lot.